Adam Button, welcome
Dale,
back to Phase. How are you, buddy?
good to be here. Happy birthday to Blake too.
Oh,
Yeah.
thanks, Adam. Appreciate that.
So, when are you going to be 50?
That'd be a little while yet there.
Huh? I would love to be 50. Let's talk about what's happening in the markets. And I want to acknowledge that at the beginning of the year, and this is a quote from you, we were going over the board as usual, and you said, Dale, I'm worried about China. You were one of the first to bring it up. I think it was before Evergrande, and really has been happening in the background for a long time, but it seems to be, coming into more of the forefront that China could tip the whole globe into a recession. I mean, they pulled us out in 2008. They helped pull us out of the Great Recession. They're going to take us down with what their zero COVID policy.
Thanks, Dale. It's interesting you mentioned 2008 because I think it's the untold story really of the financial crisis is how much China stimulated. I mean, the whole world was really on its knees, and China went absolutely bonkers with the stimulus in 2008 and helped pull the whole world out of it. Whereas now it's the opposite, right? China is the sick man, obviously, along with Europe, and so that kind of put isn't there anymore, and it's worrisome. Markets. But to bring it back to just me and you, I mean, last month we were talking on here in July at some point, I guess it was, and you basically nailed the bottom of this equity bounce. It was a really fascinating interview if people pull it up, because we're kind of thinking out loud a little bit on just how negative sentiment was about 5 weeks ago. And that was really the tell, because everybody was screaming bearish, negative. And I mean, that's trading, right? And nothing's improved on the fundamental side. But everybody was bearish. And that was an incredible bounce and a rally. And I think, to catch that, sets people up pretty good for this next. And now we're here again, and it's looking to me like it could be a turn as well.
Yeah, we're talking about it. Failed right against the 200.
It's almost cliche, right? I saw it running into it on last Wednesday or so, and it hit it, and it was like, well, this can't die here, can it? But
can you imagine if we get a pullback and close back above the 200?
Well, that's it. I mean, a lot of the kind of bears now started to second guess themselves. It was a pretty impressive rally. Certainly technically, you've got the RSI there. You're back into kind of a neutral range. VIX popping again. Europe. I mean, that was the other thing we talked about a month ago, and you were a little more bullish than I was. Well, I was constructive, and it was the gas crisis in Europe. We didn't know what was happening with Nord Stream then. They were talking about this shutdown. And we kind of talked it out loud about saying, well, it doesn't really serve Russia to shut it off completely, but to taper flows would have been the answer. And that is exactly what ended up happening. And now here we are, they're going to shut it down for another 3 days. Who knows what's going to come out of that? But this kind of tapering it to 20%, I think Russia is making more revenue than it did a year ago at 100%, because the prices are so much higher, the 20% it's selling. So, and Europe's absolutely on its knees here. I think Citi was out this morning talking about 18% inflation in the UK by January. And, Europe is going to be facing the same sort of thing, depending on energy subsidies. And I was very bearish euro when we were here.
How many countries are going to break from NATO this winter when they're under even more duress? It's not just financial. It's about that there is no gas. He turns it off.
Well, that's right. I mean, I think it takes a while. I don't know if anyone's going to break this winter, but who has the ability to withstand this longer? And right now, Russia's obviously under some significant economic pain, but Putin he's not up for election or any kind of real election.
He just has to avoid car bombs.
And he's yeah, that's right. He was out there saying, Russia, no one can take pain like Russians. I don't know if I'd argue against him.
Well, I think that, a lot of people, even in the U.S., saying, Russia's just a gas station, um, you know, uh, are eating their words. So it's not just a gas station, is it? It's an everything station, commodity wise.
And that's what me and you've been talking about for over a year, 2 years, really, is that the energy market is misunderstood. And that's probably been the best opportunity in markets in the last year is, okay, Russia just produces oil, but if you take away 10% of the world's oil or gas, the price can go stratospheric because the inelasticity of demand in a lot of this, and that's and then gas goes into production of electricity. You say, well, now Russia's just the electricity station of Europe, and then suddenly it dawns on how important that whole paradigm was. But I don't see any signs of Europe breaking here politically yet, but economically, I mean, it's dire, and it's interesting to see the euro back below parity. And it's funny, we look back a month ago, we were talking and things were bad then. The euro wasn't much higher than it is now, though, and things have gotten a lot worse.
It's going to take closes over 103.50 to change the trend. The only caveat is I did see or read about positioning in the dollar and euro, and I think this is the most short the market's been in the euro since 2018.
Yeah, well,
that was another pretty good low, huh?
Some real money selling of the dollar in the last month to keep it here as well. I mean, the Fed, if you look at Fed pricing, I mean, we've taken out 50 or 75 basis points of hikes. So part of that chart reflects somewhat of a weakening dollar, and we saw that in dollar yen, right?
I was going to ask you what you thought about that, and that brings us back to yields. So we got the 3%. This is the game on Friday. Are we going to blow to new highs, or is this another failing rally in yields? Adam, what do you think?
I think the most important thing that's happened singularly in FX really this year is the decoupling of the yen trade. What happened on Friday in equities in the US?
They were down.
Big time, right?
Yeah.
And what would happen with dollar yen?
Yeah, right.
It's up.
Yeah, today too.
You can take any year in the last 20 years, and that was like a black swan event for those to move in the opposite direction.
Right.
And it's the paradigm. There's an entire regime shift that's ongoing right now in FX, where the yen is no longer the safe haven of choice. It's
By the way, Adam, do you recognize the shirts?
Hey.
Huh? Anyway, Mario Draghi playing lead guitar in Italy now.
Maybe he'll make his way back one more time.
He'll do anything.
It's a sinking ship right now.
Yeah. Okay, so that's an interesting. Yeah, that is really something that really did break down. Kind of went more with interest rates than, and that's partly that bonds went down. Rates went up. So, it decoupled from risk off, but coupled up with yields.
Yes.
This is kind of interesting to me today, is Aussie usually suffers with risk off. And it was down Friday, but I would have expected it lower here today. So the commodity currencies are saying something else. Dollar's threatening the high. Canada got to 61.8. Aussie is making its maybe its second, or working on making a higher low here, even if they took it to 68. These currencies are saying to me that even though gold is down and oil's been down, that the commodity bull is not dead.
I mean, the next cycle, whatever it is looking very good. I mean, I think a lot of currencies you're pricing in now, first of all, current account and trade surpluses. And secondly, energy security. Anybody who has it is a winner. Anybody who doesn't have it, say goodbye to your heavy industry. And I think it's widely understood that the market will be short of commodities at some point this decade. And the timing is hard to say, But that, I mean, those investment flows haven't even started. I think you can't start a mine right now in Australia because you can't find workers. And that, I mean,
Even if you have workers, it takes a long time to get a mine online, doesn't it?
well, absolutely. I mean, and then you're yeah, it's hard to pull the trigger on building a mine because you might say, well, this is $1 billion mine. And 2 years later, you come back and say, listen, the cost of everything went up and now it's $1.5 billion. And that's not a very good look to investors or anyone else. And predicting costs right now on anything like that is extraordinarily difficult. So yeah, Aussie, there's still a lot to like there. And I just think a lot of these correlations are breaking down. Really, the regime of the first 20 years of this century has a lot of that, safe haven flows into the yen. That's not really happening anymore. The Swiss franc still getting it, but it's less compelling than it was. And you have intervention risk, tons of money flowing into dollars. But then you have places, these pockets, Canada, Australia, some emerging markets of getting these kind of flows as well. So I think we're just looking at a new world order right now in FX. Now, like you say, yields, yields part of it. We go back to the old regime. There's a reason that regime was in place. But I think in terms of Europe, it's really falling apart. I wouldn't be surprised if we see physical immigration from Europe, and not just the pockets of sort of poor Europe to North America, that sort of thing. So it's ugly. And that will be reflected in the euro, without a doubt.
Yeah.
It's
all right. Well,
down.
we're only we're about 30 pips away from, what was this low here?
That's it. I mean, that's
99.52. So we're about 40 away to making new lows. One thing, won't confirm on the daily, but
I mean, the equivalent the equivalent price on gas is like $500 a barrel right now, up for gas oil equivalent. It's insane.
Okay. So I know that long term you're bullish. If say for example we got another break back down towards 84, 83, or even here, are you tempted to buy the energy? I know the play's been in nat gas, but maybe there's going to be substitution. And well, I'm normally bearish crude, right? I can't be bearish down here.
It's that substitution trade is an interesting one because it's never really been done. It can't be quantified. You can look at, okay, it's $500 barrel equivalent, so you switch to oil, but it's not easy to switch. You can't flip a switch and burn oil instead in all cases. So we'll see. I mean, you have $5. The last $5 is probably Iran being priced in. You might get another $5 lower if that happens. Looks like it's going to happen to me, but it's politics. Tough to see what happens there.
I'd buy that break. It's kind of, I mean, the top was put in at 132 when Europe said they're not going to take Russian energy. These big news events seem to be behind inflection points. So we've been going down in crude since, last year with a secondary high in June. So I think the market, that would be a sell the rumor, buy the fact to me if Iran deal got done.
Certainly some of it getting, and then, everybody's worried about China and Europe. Fair enough. How much oil demand are you really going to take out with that? How bad would this global recession be? And how much oil is out there? I mean, the SPR is going to run off in October. They're not, I would have thought actually a few months ago they'd extend that. They're going to keep, they're going to end that US SPR release. Russian sanctions, a lot of them hit in December. And right now is the time of year when oil companies start to make budgets for 2023, drilling budgets. And I would have said it at 120, 110, we'd see some pretty big step ups in spending and drilling. At 90, I think it gets pretty cautious again. So you're not going to have the supply. And that isn't necessarily just a 2023 story. It's 2024, 2025. It takes a while to bring things online. There's just not enough supply out there. And I think it couldn't get any simpler than Warren Buffett buying Occidental. Hand over fist, the trade is in the oil companies, not necessarily the commodity, because even at 90, they're making insane amounts of money.
Yeah, the shares have held up much better than the underlying commodity. So can I get you to say that you want to be a buyer in crude at some point here?
Yeah, absolutely. I mean, I thought we'd maybe hold 90 a little bit better, but 85,
Yeah.
I mean, and even like, I don't, it's same as that copper trade. I'm just so confident in the long term. There's not enough supply in these things. Now, the risk is that you have a really brutal recession. And I'm not in
Hard
that
landing.
camp. Hard landing. And, you know, you start to see headlines like UK inflation at 16%. 18% from Citi today. You think, geez, maybe they have to raise to 6% or something like that. You know, that doesn't curb energy inflation. So I don't know if it does a lot of good. And I think central banks are going to have to struggle with plunging the economy in recession because of high natural gas prices. But that's the risk right now, is that rates don't, you know, right now Fed market is priced terminal 375. You know, if we start thinking about
we're way off that, right?
Yeah. And
I mean, we're only at 298, so 375's at new highs for yield. So
but
we'll
you know,
see
the
what
US,
happens.
there can be a virtuous cycle here. And we talked about it last time, with that pain gets so bad in Europe and the UK, even in China, that it takes down demand and it frees up supply for the US, which lowers inflation, allows the US to continue to grow, keeps the Fed from hiking too much. So Europe takes all the pain, the US gets all the gain.
Interesting. All right, so tell me about what you think Powell's going to say Friday.
Yeah, I mean, I don't think that there's really that much going to be in it. It'll be that same, we're going to do what it takes. I don't think he's going to give a strong hint on, they want to preserve this optionality. I think that was one of the big messages out of the last FOMC. We're done with telling you what we're going to do until maybe before we do it, we'll leak it to the Wall Street Journal or
till we get positioned.
And yeah, and they, you know, they want to see non-farm payrolls, they want to see CPI, PCE, yeah. They want to see it all for another month. We're still, I think it's 1 month yesterday to the FOMC. Yeah. So it'll be that we're committed to bringing down inflation. We don't know what we're going to do. And so what does the market do with that? You know, we're kind of in this negative mode right now. Maybe the market, you know, the last turn for me was on Waller. Waller came out and said the market was sort of debating 50 or 75 or 100 ahead of the last FOMC. And he was the last guy to talk. And he said, unless retail sales are really strong, CPI is super high, we're going to do 50 or 75. And that was the big turn really in risk sentiment. Now we're way back up here. Europe's falling apart. It ran into the 200-day. Yeah, yields, like you're showing there, a tick back up. I think it's a lot easier to be negative right here than it was a month ago.
Yeah. Okay. So, you know, anything you see, I know that you're probably looking ahead into September for some seasonals. Anything seasonally you'd be looking for?
Well, September's the only month, I think, in the last decade that the NASDAQ has averaged lower.
Okay.
And if you look at, I think you go back a couple of years, if you remember 2020, you know, we're coming out of the pandemic or coming out of the peak pandemic. Yeah. And there was a real strong rally at the end of August, and it kind of almost blew off the top and then plunged in September. The liquidity comes back. I know positioning isn't great right now if you're bearish. So the positioning is pretty bearish already. And that was really the tell a month ago. But I think now, we talked about the turn a month ago, and I think it's funny we're talking again, Dale, because I'm bearish here.
Okay.
And we'll see what kind of shakeout we get in September.
I'm thinking around here.
That's a good start.
39, yeah, 4,000, 39.5. And I'm thinking if we break 3,800, the odds of new lows increase very dramatically. 3,800 is kind of the bull bear line for me.
What has to happen to get there? I mean, we see some more negative economic data, high inflation still, start to price in the Fed hiking more. China is easing today, right? So that, I mean, that's probably behind that rally in the Aussie today. I mean, that's twice in 2 weeks that they've cut. So you got to assume more of that's coming. But they're struggling with the property market, and that's a tough
It's a
knife.
basket case.
It's tough to stop that kind of, I mean, that's a psychological trade.
Yeah.
I don't know,
Well,
50 basis points.
all of their country people that had money and had savings, 90% of their savings went into that. Do you believe these bank runs are real in China?
No, I mean, I think this China has incredible levers to pull in terms of
So you think they're phony, fake
if you remember
news
the ones outside, there was like there was a bit of a scheme that was tangentially connected to banks, and they ripped people off, and so people went to the banks. You see this kind of in any country where
it sounds like Celsius or some
that's
Bitcoin
it, right?
broker.
You blame, well, they said, I can't think of a great example, but that was kind of the thing there. People blame the bank for somebody had kind of partnered with that ran a bit of a scam and took everyone's money. And then, you got to remember the world we're in, and we see it every day, is things get elevated and escalated and amplified, the dramatic negatives, right? And I think that as a trader, your mindset more and more needs to lean against a lot of this and be skeptical of it. And because that's what gets amplified right now, is any kind of drama, and be careful with that. I mean, the world is still a pretty good place. China is still growing and will continue to grow. But this could be the shakeout. The real crisis in the world right now is gas in Europe.
Yeah, commodities.
That's where I want to be bearish.
Okay. You worried at all about Russia escalating with what's happened recently? I'm almost kind of surprised. I mean, we have supplied weapons that help them target ammo and jets in Crimea.
I mean, if you think Russia's strategy, I mean, if I'm looking at Russia, I'm thinking, okay, we maybe haven't done as well in Ukraine as we had hoped.
Right.
But we're doing a lot better in Europe. If your idea is to wreck Europe politically, this is looking pretty good. So you say, am I even, I could kind of take down all of Europe here and get kind of total political regime change. I don't know if they were these, it's unrealistic to think they'll be pro-Russia, but that is an interesting way to look at it, I think, and say, Russia can kind of just stretch this out from here.
Yeah, to break U.S. hegemony over Europe. I think that's it. And, freezing in the winter is a pretty good leverage tool, isn't it? It's one thing to go broke paying bills. It's another thing not to have it.
So Russia, is there that much in it? They could kind of just wait it out now if they think they can.
Yeah.
Because I think Europe's, I don't know how much pain they can tolerate. We'll see. But this winter, I mean, they're all in for this winter. And these gas prices are scary. And what scares me is it doesn't seem to have hit fully. I mean, you see some businesses, I think there's a lot of lags in the pricing of it and billing and whatnot that I don't think people have realized that they're going to be hit with. I mean, it was crazy to see that Scholz, German chancellor, there were the protesters there, the topless protesters. I'm sure you've seen, Dale.
I didn't see that.
Oh no, well, you'll have to look that up. They went to take a selfie with Scholz today, and then they went topless, pulled off their shirts, and it said "No gas" or "Cut off Russian gas" or something along those lines. I was struggling to read the words, but they got their message across. But it indicated to me that
20 years ago, before you got married, you wouldn't have even flinched.
it indicated to me that the at some point it would be the protesters, topless protesters saying, take the Russian gas back, right? Like, has that pendulum really swung yet? It's insane to me. It's either people don't know how much they're about to get hammered with that, or they're just wildly indoctrinated. I don't know what the sentiment is on the ground, but I know what it will be. I know what it will be.
Best idea going into September.
I
and if you don't have any,
short Nasdaq, short the euro. really watch this yen trade. It's interesting. It's up today. Futures way down. I think dollar can go really super strong, and we get
melt up in the
real,
dollar.
a real something going in the dollar.
Okay. All right. Don't fight the trend, Adam Button. And I really appreciate you stepping up today, bro. Great. Another good conversation. I always learn from you.
Wonderful way to start my week, Dale. Thanks a lot.
Okay. And you could follow Adam individually at FX_Button and follow him on Forex Live, and one of the best news traders I know. And appreciate you being with us. Have a great end of the month and fall trading season, buddy.
Thanks for everyone. Appreciate those comments down at the bottom of the screen too.
All right. Take care. Adam Button, everybody. Thank you. Thank you, bro. And in about 18 minutes, you can join the team on the Morning Edge. And everyone, let's be hopeful in our trading, but have your stops in. Let's go into this week being hopeful. And don't just count your pips, count your blessings. So far, I've seen a couple of tests. I don't know if it means anything. It is, you know, this 78.6 level, silver's trying to hold. We'll see. And that's a wrap. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.